Our next guest argues there's still significant runway ahead. Joining us now is Guggenheim securities analyst Michael Morris. He raises price target to 1,100, maintains a buy. All right, good to have you, Michael. Why more runway ahead?
Well, there's a couple of things here. The first is that the penetration for the business on a global basis is still fairly low based on the information that we have about how many broadband households there are globally. So to put that in some perspective, right now there are about 750 million broadband households worldwide, excluding the markets of China and Russia. And the company has 300 million subscribers at the moment, right? So in the U.S., the first market, the most successful market, about 2/3 of households have the Netflix service, whereas outside the U.S., only about 1/3 have the service. So we still see a lot of runway for member growth. And keep in mind, this company just grew their U.S. households by another 4 to 5 million, a market that many people thought was already saturated.
Yeah, that was certainly something we'd anticipated some quarters ago. Is the pricing power there for the rest of the world? We know what we may be paying here in the U.S. What are we seeing in terms of average price around the rest of the world and how profitable those subs are?
Well, in aggregate, including the U.S. and the worldwide subscribers, you're seeing both pricing power and profit expansion. So when you look at the average revenue per user, it's growing up, it's going up across the board, and you see the company able to take price increases in a number of markets. Last night, they announced that they were taking price increases in several markets, including the U.S. So you're seeing that come up on average across the board. And of course, the profit margins continue to expand. They're going to approach 30% operating profit margin. The guidance is 29% for the year. That's an upward revision as well. So you're seeing both of those things. Now, to get a little more to the point, as you expand your subscriber base in lower price markets, your average revenue per user across the entire base does take some pressure. But that's a really good problem to have when you think about both the pricing power in those markets and the number of subscribers you're adding. And of course, we haven't talked about it yet, but the fact that they've added advertising as a significant part of their growth paradigm is just a great part of the story.
Yeah, we talked a bit about the doubling and the doubling that's going to happen again on that front, Michael. I wonder where you think pricing hits a ceiling in that it might stimulate some churn. Are we anywhere near that?
I don't think so, frankly. When you look at how much engagement the platform has, which is 2 hours a day per household, and a number that continues to grow. The company right now is about 8.5% of TV timeshare and growing, right? So less than 10% of TV timeshare hit a new record in December as that grows, and a price point that is still well below that benchmark that is the bundle. We think they still have pricing power. The introduction of advertising as a way for consumers to compensate the company just gives more choice to the consumer as to how they want to engage with the platform. So really, you've given the consumer different options for how to spend time and how to compensate the platform. And we think that they will continue to have pricing power. Right now, it's going to be about digesting these price increases that they just announced.
Yeah, I mean, it may have the effect of pushing people to the ad tier. You mentioned it. What are your expectations there? They continue to sort of talk about it as modest now, but with grand ambitions.
We have really big expectations for the advertising tier, to be honest with you. So to put that in perspective, we estimate that advertising is a mid-single-digit percentage of revenue for the company, about 5 or 6% in the coming year. But it's a very large part of the growth. We think it could be as much as 1/3 of the revenue growth for the business in the coming year. And that comes from both those consumers who have taken the advertising supported tier and who engage with the service at very similar levels to those who take the ad-free tier. But it's also these live programs that go across the entire subscriber base, even those that are premium and ad-free subscribers on most programming. They do see advertisements on live programming like the NFL, like WWE, and these are all expanding that revenue source for the business. And right now, the high watermark in the industry is Hulu with respect to how much ad revenue they generate, about $3 billion annually. I think Netflix is exceeding $1 billion, and I think that $3 billion will not be a ceiling for the company. I think they'll be able to grow through that number over time.